Hey, this video is about Bitcoin. If you're completely new to Bitcoin, how much should you invest? How often should you invest? What kind of price swings can you expect? What kind of performance can you expect? And so there's a lot of new people in the space. A lot of people see now how the price is rising. They're wondering, is it too late? And so this video kind of can give you a little bit of a perspective. Over here you see one of my favorite charts of Bitcoin. It's the Bitcoin rainbow chart. It's basically a regression line over the historical price movements of Bitcoin. So this chart goes all the way from 2012 to today. And on the y-axis you have a logarithmic scale, right? So the very first prices were around, in this chart around $6, and now we are at around 55 or something. And so you couldn't see all the price swings in the early days if you wouldn't have a logarithmic scale. So each major step in this chart basically represents a factor increase. So basically a 10x rather than a static absolute increase. And so I like this chart for a couple of reasons, right? First of all, it gives you an idea of how fast Bitcoin is appreciating, at least how much it was appreciating historically. It also gives you a perspective of how crazy the last month have been, right? So we basically went from 10K all the way to our 50 to 60K right now in a matter of a few months. And that's not very typical. And it also gives you a perspective of how long a bear market can be and how severe they can be. So when you just look at the last bubble, right, we came from around 20K all the way down to 3.5K. So if you look at all the price history, you got drops of up to 85% in Bitcoin multiple times. And so there's nothing that could forbid Bitcoin to do this again, right? It might again drop quite significantly, maybe not 85%, because nowadays when people buy, there's less speculation in the market and there's more people that really buy it for other reasons, just to get rich quick, right? They buy it for like the sound money principles, for not being able to inflate the currency. They buy it also to have something that can't be taken away by the government. And so there's a lot of reasons why you might buy. You might also buy it as a portfolio diversifier, so to balance out other very highly correlated assets. When you buy stocks, you very often have very similar price movements. When you add some Bitcoin to it, you might be able to reduce your overall volatility of your portfolio. So many reasons, and a lot of those reasons are long-term buying reasons. So that's why I personally don't expect an 85% drop anymore. But given how fast we're currently appreciating, I do think 50%, like a sudden 50% crash, is not off the table. And so you have to be ready to lose a significant fraction of your invested money. And even though the appreciation long term is very nice, short term you can get totally wrecked and you can get totally demoralized. And because of that, you want to be not too dependent on actually when you buy. You want to kind of spread the risk of when to enter the market. And the most common way, and the way also I started buying, I basically started buying at it was around 7,000, 7,500 over here in 2018. And I continued buying and buying even in the dip, and accumulate Bitcoin over time. And so dollar cost averaging, or buying a specific amount of an asset in a predetermined interval, is, I personally think, the best way to start buying and start investing into Bitcoin. This whole trading and trying to time the market is probably not good when you're just starting out. And who knows if it actually really has a positive expected value. But just looking at the long-term chart, and the more also you learn about Bitcoin, the more you will understand why the price is actually moving the way it is, and why somebody would pay so much money for one Bitcoin. And that's in the end what you really want to bet on. You want to bet on the very long time horizon. So let's look at a second. So maybe first of all, this website, this Bitcoin Rainbow chart, I'm gonna put it down in the description so you can have a look at it yourself. You can toy around with it a little bit and see how much we might drop, right? Like, you know, we could in theory go down to 11K. At least it wouldn't be completely outside of what historically has happened with Bitcoin. If we go beyond, say, 130K in the very short term, we would be way above what used to happen. So that's kind of like the range. It's a big range, right? It's almost 10, it's more than 10x actually. But you can see, you know, at least get a certain feeling of where we currently are. So dollar cost averaging, that means you buy for a predetermined fixed amount every month an asset, or every week, or whatever your interval is. And so there's a very, very nice calculator, DCA BTC, so dollar cost average Bitcoin. And this calculator basically opened my eyes when I first started. So just look at this, right? So let's say you were to invest, let's say $250 every month, which is a relatively modest amount, I guess, for a lot of people. You would invest, quote unquote, just that for the last 3 years. You would be now at a quite nice nest egg of 62,000 US dollars. So that's the power of dollar cost averaging. You set aside a relatively low amount every month, something that you might not even feel that much compared to your overall salary or whatever cash flows you have. But over a comparatively small amount of time, you can accumulate quite a bit of wealth. And that's just because of two reasons, basically. First of all, the overall uptrend in Bitcoin is immense. But then what makes it even more attractive for dollar cost averaging are the swings within those trends, right? If we were to just monotonically increase, of course it would look a bit safer to do, but you would never have the chance to actually buy Bitcoin for that cheap. So the real leverage that really pushes the wealth up during dollar cost average is actually to stay committed to the asset when times are rough. And that's one very nice thing about dollar cost averaging, right? The other nice thing about it is you start out investing with relatively little money. Right, so after 1 month you only have $250 invested, obviously. After 2 months, 500, etc. So your money in Bitcoin as a percentage of your overall wealth is relatively small at the beginning, and it grows over time. And that's good in the way that you can in that time also accumulate more knowledge about Bitcoin and then understand actually why does it increase. If you were to say put just 10% of your net worth right now into Bitcoin, knowing nothing, or just knowing, like, you know, some basics about it, you might get very scared when it crashes. When it goes down 50% because of some random news, maybe some hedge fund sold a lot of coins, or maybe there's some rumor about some software glitch or whatever it is, you might be panicking and selling. But if you build up your position over time and you acquire the knowledge about Bitcoin over that time, then your skills are kind of aligned with your position. So what usually happens with Bitcoin is that at the beginning people jump on the hype train. They come for the short money, for the speculative gains. So you come for the speculation and then you stay for the sound money. So you want to be invested in Bitcoin according to your knowledge of the asset. And that's what dollar cost averaging basically does. If you understand why Bitcoin can be a better gold and how high it could rise in case it really does beat gold as a store of value, then you might think, okay, I might have a pretty big fraction of my net worth in Bitcoin because I believe there's a very good chance it will perform like crazy. But if you don't have all this knowledge and you're just heavily invested hoping for the best, you will probably exit the market earlier than you should. And so that's why dollar cost averaging is great. Another great reason is when you now invest a lot of your money, or say just, let's say in our example here in this scale, you invest 2,000 US dollars in it, right? 2,000 would right now feel like quite a lot of money, probably, compared to the 250 a month. So you would probably check out the price quite frequently and hope that your 2,000 don't turn into 1,000. But if you invest 250 every month, this kind of feels like less, right? It's almost like when you buy something on credit versus buying it outright. If you buy a car outright, this seems to be like, oh my god, a car, it's like, I don't know, 50k US dollars. That's like a lot of change. I don't want to spend all of this. But once you convert this into monthly payments, it starts to feel suddenly affordable. It's kind of like the same way here with investing in Bitcoin. If you invest a lot of it right now, you might panic, and your psychology might work against you. But if you do buy every month, you get used to the swings. You see how the prices develop. If it drops 20-30%, you might start thinking of it as, actually now I can even accumulate more of it. So this is a buying opportunity. You don't really want the price always to rise, because you actually have a next date for buying just in the pipeline. So there is this interesting dichotomy of feelings once you dollar cost average, especially at the beginning. Because at the beginning you think, oh, when it goes down I buy more, when it goes up, oh, I made money. So no matter actually where the price goes, you always have a good story to tell yourself, and thus you're not getting too attached and too emotional about the heavy price swings that happen with Bitcoin. You might have heard of the stock to flow ratio in Bitcoin. It basically tries to model the price of Bitcoin based on how much new Bitcoin gets issued, and it basically tries to derive the market cap of Bitcoin compared to other asset classes such as gold or silver. So gold and silver, they have yearly productions, right? There are mines that mine gold, that mine silver, and there's a certain amount of that commodity already floating around in the market. And so if you relate those two numbers to each other, so how much gets produced versus how much is already on the market, you come to a stock to flow ratio. And the less, relatively speaking, new issuance of that commodity there is, the higher the price of that commodity should be. So in other words, the rarer something is, the more expensive it should be. And that's what this stock to flow idea, the stock to flow model, is trying to use, this concept, to come up with price predictions. There's a very nice Medium article around the stock to flow ratio as well. I'm going to link that as well together with this chart. And in this chart you can basically see that we are currently running a bit ahead of time. So according to this model, we should actually theoretically be around 37k. But on the other hand, we also see that the 100k are still in sight by August of this year. I like this model also quite a lot. Of course, there are significant divergences from whatever the model considers a fair price. But I think the narrative of Bitcoin actually becoming the new digital gold has been established quite well already. So there are hedge funds, there are institutions, there are high net worth individuals that buy Bitcoin because of this thesis. And so I think the thesis is not going to go away anytime soon. And so the demand is probably going to continue, and thus valuing Bitcoin based on its scarcity is probably a good idea. So this chart basically says now the price can go up to, 1,300 thousandths or 1.3 million in 2025. And so that's a pretty bold prediction, right? It's a 20x from here. But the model was not too bad in the past. And I do think it has a certain validity to it. So if there is actually enough demand, the supply itself will be rare enough to justify those kind of prices. So just think about it, right? You have here a potential 20x from today if you just hold Bitcoin for the next around 5 years. So if you just give this model a bit of credibility and say, okay, maybe it's a 10% chance it can go to $1 million, then Bitcoin is already undervalued by, half, right? 10% of, say, 1.3 million is 130K. So if you believe in this model has at least a validity of 10%, we should see Bitcoin at a 130K very soon. And I personally think Bitcoin is probably more likely than not to actually reach $1 million in, say, maybe not in 5 years, maybe in 10. Who knows how accurate all these models are? There are a lot of models. Some are more useful than others. And the price predictions, obviously, of the stock to flow model are a bit different to the price predictions of, say, this rainbow chart. But all of them are incredibly bullish, and all of them also show the potential dangers, right? There are significant deviations from any model. But if you do think that long term, 5 to 10 years, Bitcoin might be a good investment, then my advice to you would be just start dollar cost averaging into it. Don't go into it with a big lump sum and pray for the best and say bye-bye to the market when the price drop and you're disappointed. Rather buy every month, accumulate knowledge while you accumulate satoshis, and then your conviction over time about the asset class will grow, and with it also your wealth inside that asset class. And so you will be in a good position and you will not feel bad about the strong volatility, about the strong swings, and you'll be happy to have more than maybe 10% of your net worth in this asset just because you see the strong potential. I hope this video is useful for you. Give it a thumbs up and subscribe in case you want more of this kind of content, and see you next time.